Hello everybody and welcome to another edition of Bleeding Crypto's Market Update. Today is Tuesday, May 9th. It's been about a week since I made my last video. I've been real busy, guys. Like I told you guys before, I do have quite a bit of a community to cater to. So I've got my Discord group, I got my Telegram group, I got my Twitter group. I got my own scalp trading going on right now with all this volatility. It's a great time to be scalping. I live in the 1 minute to 5 minute time frame. So for me, it's always a bull run, especially when you use leverage. You've got to know what you're doing to use leverage, first of all. So remember what I said before. I don't advocate leverage unless you feel 100% confident in your TA. And even when you're 100% confident in your TA, you're probably going to get about a 60 to 70% success rate. Don't expect anything more than that, no matter how good you think you are, because leverage is a whole different game. Remember that you're playing against the house. So when you play against the house, they know your habits, they know your orders, they know your stop losses, they know how to take you out and where to take you out. So you're not going to be able to get away with too much. But if you are careful and you don't overexpose yourself, you can make a pretty good living scalping and day trading. But for now, I'm going to update you as much as I can. But I wanted to do this video on a request of someone that I met today called Dave that asked me what my thoughts are on Bitcoin. So I said, you know what, since I haven't done a video and he was asking, I said, let me go ahead and take this opportunity right now to go ahead and make that video since I joined his private Telegram channel. So I'm going to go ahead and do that for you guys. Let me go ahead and do this. Let me start by going to a daily time. Well, actually, let me go to my favorite, my 12-hour time frame. So let's go to the 12-hour time frame and we'll start from there. This is a blank chart. So this is, I have no indicators, nothing other than just the default volume that it comes with. And because I am not in my office, I am actually away from my office at the moment. I don't have my mic. So hopefully the volume on here is not too bad. Since I don't have my mic, but I'll do my best to keep my voice up because the default mic on the laptop sometimes aren't that great and they don't pick up the voice the way they should. So I'll go ahead and try to keep my voice up as best as possible. Right now, what you got going on, as you can see, guys, is just a lot of chop up in here. So a lot of chop is great for scalpers because there's a lot of opportunity, but for those who are more of a swing traders or long-term investors, this is where, let me go ahead and just let me turn off my notifications. I actually, guys, I'm going to pause the video for just a second. I'm in a scalp trade and I need to put a stop on a trade. Give me 1 second. I'll be right back. All right. Sorry about that. Like I said, guys, I am constantly have something going on, so that's why I don't make these videos that often. All right, so I'm at the 12-hour time frame. We're looking at the big chop here. Lots of volatility, lots of opportunity. Now, here's the thing, guys. Yes, we are in a bearish market structure, but here's the thing that I'm most focused on right now is this area of support. So everyone has been expecting. Let me go here. Let me put this red here. Let me put this green. Excuse me. Okay, so everyone has been expecting a correction and a move back down because that's what we're accustomed to. You can see just by zooming out, we had a big run up here. We had some consolidation, another run up here, consolidation, kind of you can see almost a channel forming, an ascending channel, broke down, put in a bullish structure here, a nice W, got us back up. We just couldn't hold it. We haven't had a retrace since this move up here. We finally we were able to retrace here, put in a higher low compared to this low here. Nice push up here, consolidation, another push up here. And here is where we've been waiting for a move to the downside. Now, this move to the downside, we got up here in March 16th, and it's been about a month and a half or probably, yeah, about a month, almost 2 months up in this area here. Actually, almost 2 months. Now, why don't we fall? Why don't we just come down and finally break down? And I'll tell you why, guys. Look, this is a derivatives-driven market. You see the volume down here, guys? You see this volume down in here? You see this massive drop-off? You know why we had a massive drop-off in volume? Because Binance stopped the zero trading fees on their exchange. When they stopped zero trading fees, all the bots, all the algorithms, all the manipulation, the heavy manipulation, and then they got caught, get stopped. So that's why the volume just fell off a cliff, and it's been down in here. It's been just pretty much in the shitter. Now, when you look at the derivatives market and you follow derivatives market, and I follow that very, very closely, you start noticing the amount of liquidations that are going on inside of this area. And this is the cream of the crop for the market makers. And here's why. Let me put into perspective. Let's go to the weekly time frame, and we've got this zone here. We've got this zone right in here, between here and pretty much right in here. So all I'm doing is grabbing. Let me take this out of here. Okay. Oh, here. Why is this thing not? Oh, you know what? I grabbed the wrong one. Sorry. That's why it's showing me that percentage between right here, this candle body, and we'll go with this wick here and this area here. All right, perfect. So what I use here, I use this candle body here, this candle body set right here, this wick here, this wick down here, and then this wick on this other side. This just gives me a general sense of prior strong support. That's the number one thing I look for when I'm trying to establish a resistance area. I don't worry about this. I didn't focus on this at all. Though when you look at this, you can see why this area was strong resistance, because I just focused on this previous support. Now, why is this important? Because we are approaching an area on the weekly time frame that people are expecting one of two things. They're expecting either we break here and we go to 40,000, 50,000, or we break here and we go back down and test 20,000 or even lower. So keeping the chop in here, as you can see from the 12-hour time frame, look, this right here, you know what this causes, guys? This causes indecision. This causes doubt. And every day, if you go on crypto Twitter, it flip-flops. So it's either really bearish or really bullish. And the market makers are taking full advantage of that sentiment, because the day that crypto Twitter is really bearish, guess what they do? They load up on the heat map. They load up on the shorts. And this is what I'm referring to. If you guys want to subscribe to HyBlock, please use my referral link in the description below, and you'll be able to save some money, 15% off, and I get 15% as well off of my subscription. So let me show you what's going on here. We're gonna go back 7 days. That's all we really need. 7 days here. I'm gonna run on here, and there we go. Okay, so when crypto Twitter is bullish, they start longing the market. They start going nuts on the leverage. And then what ends up happening, you start building heat here at the bottom. Unfortunately, guys, I can't remove the boxes on this cursor. You're gonna have to live with it for a little bit. But I'm making my point. So as you long the market, thinking, oh, we're gonna break resistance, we're gonna go, she's gonna go 35,000. People start to long it. What happens? You see this yellow here? You see this bar here at the bottom? How it goes from a really almost to nothing. It gets a little brighter. We're looking for a bright yellow, so we're looking for this here. This is the max right here. You see, as the market is uppy here, uppy, and everybody's talking about breaking. The longs start to pile up, and you can see this streak down here just gets brighter and brighter until what happens? Until the market just says, you know what? The market maker says we have built up enough liquidations in this area because everyone is bullish. So they come down and they take everyone out. Now, look what goes on here, guys. Look what is going on here. When we're going down, people start getting scared and they start shorting. And look above. Look what's happening up here. You see what's happening up here? They're building the liquidation heat to the top side. So these are where the shorts are getting liquidated. All these people getting bearish and shorting the market is building a high percentage of high volume of liquidations that will get liquidated if we move to the upside. But the market makers are gonna wait, because they're gonna come down and they're gonna take all of these billions of dollars worth of contracts, and look at the way they just slice right through all of this fear. And as this fear increases, so does the shorts. And these are the liquidation points. So when you go back to that chart that I was talking about, oh, where was it? Let me see here. Oh, I got a lot of charts right here. So when you go back here, what's the incentive for the market makers to drop it? There's no incentive. Keeping it here and keeping it within a range of indecision causes you to react. And when you react to it, and if you think you're unique, you think you're special, you're not. Everyone thinks exactly like you. And the reason I know this is because look at the concentration of this heat. It's in one exact direction. So not only do you think, not only does everyone think the same, but they're using the very similar leverage right in here. That's why you have a concentration here. The majority of people are liquidating here. You think about all the millions of people playing leverage, playing a position, and using leverage, and then look at one area of here. I'm going to zoom in here just so you can get a good detail. And yet look at the concentration of liquidations in this area. That goes to show, guys, you're nothing special. This is you're thinking what everyone else is thinking. So when you have that type of, sorry guys, I have a lot of charts depending on what I'm doing. There we go. So when you think you're special, you're not. The market makers see all that. They see an accumulative move. I'm going to move HyBlock actually over to this here. There we go. So the market makers are looking at that. They're looking at your orders. They're looking at the liquidations, and they're allowing you to think fearful. The more fear you have, and if you go to crypto Twitter, 90% of the charts are doing what? Oh, we're going to 26. Oh, we're going to 25. Oh, we're going to 23. Oh, we're going to 24. What is that doing, guys? That's increasing the amount of fear in the market. Watch this. I'm gonna lower this down to a local time frame, to a 12-hour time frame. Look what's going on locally. Look what is going on locally. Look at this. Look at this heat right above. We got heat at right above 30,000, but locally, look at this. This one is pretty even out. It is pretty evened out. But so here's where you use some of your experience. Okay, so we've got heat to the bottom. So yeah, we could fall and we could take out this heat. But look at the heat above here. Look at this heat above here. Now you go to your chart and you look at this. You go down to an hourly time frame and you look at this. Okay, so when we fall, do we just fall and never come back and just go down to the abyss? No, we don't. What do? We stay within a range. Now, here's again where you want to use some experience. Is this fall something out of the ordinary? Let's see. Let's measure this fall. We went from here to here. That's 8.39%. Okay, is that something out of the ordinary? Let's see here. We dropped from here down to here. This was 7.3%. Here to here, 9%. Here to here, what is this? 11%. So you see these falls, guys? They're relatively similar. We've got 11, 9, 7, 8. So it's not something that is out of the ordinary. But when it's happening, every single one of these times, if you go back to this date, if you go back to on crypto Twitter, if you go back from, let me move this toolbar because I can't see the date. If you go back to on crypto Twitter, April 18th through April 21st, just go back to those dates and read what's going on. Oh, guys, we're going to break it. We're finally going to 25. We're finally going to retest that. The X, Y, and Z is telling us we're going to go down. When you see that, always around here, and that's the most intense time, right in here. Everyone's calling for that. And then what happens? People stack up. They stack up their shorts, and then they give you a little fake move to the upside. Oh, no, here we go, guys. Here it is. This is it. Then a quick, fast move right up to the upside. Why? Because they want to liquidate everyone here. Now, here, as we're going up, oh, no, guys, we're going back up. We're going to 33,000. We're going to go knock out the highs at 32,000. Everybody gets bullish again. Everybody starts to long. What do? They drop it fast. Look at how fast they dropped it. 1 4-hour candle. Why do they drop it? They don't want to give you guys time to think. They want to make you think that this is happening. Oh, a bounce is going to happen. Oh, it's okay, guys. It's going to bounce right now. No, it's not. It bounces. Look, very similar percentage. They come and take everyone out. Now, why these percentages? You know why, guys? These percentages usually have to do with the amount of liquidations. And let me break it down. A 10x trade, a 10x leverage trade, you're knocked out at 10%. At 10% on a 10x trade, that's 100%. So boom, that knocks you out of positions. Most people don't use 10x. Most people use 15x, 20x, 25x. So they have all of this stuff figured out, guys. It's an algorithm. It's not one guy you're trading against. It's an AI computer that can think in nanoseconds a million times faster than you. They have exactly the amount of the average liquidation of what it's going to take to knock out the highest percentage of people. That's what regulates these drops, and vice versa. You have to think, guys, there's always shorters and longers in the market. So they have to subtract the short contracts to the long contracts and the leverage, and they're always going to come out ahead. Don't ever think that we drop and that on that drop, the market makers lost. They never lose. These moves are always calculated. And how do you know that these moves are calculated? Because a lot of the times on this particular, on Tether, it shows much better. If you ever go to the Tether chart and you look at some of these tops, they end in 0, 0, 0. 0, 0, 0. A lot of these top out at 0, 0, 0. Why is that? Because they have that shit programmed. They know exactly where it needs. It doesn't need to go to it doesn't happen by random. It happens by the amount of longs and shorts are in the market. It's always going to work out in their favor. This is why you never try to catch the top. You never try to catch the bottom. You know what you want to catch? You want to catch the middle. It's like a jelly donut, guys. The best stuff in a jelly donut is where? It's right in the middle. Right? You got to go through all the fluff to get to the heart, right? To get to that jelly. This is where the profits lie. The profits don't lie here, and the profits don't lie here. They lie right in here. This is where you get chopped. This is where you get chopped. This here is where the best part of your trade is going to be if you're a scalper. All right, guys. So the question right now, what am I looking at? Am I looking at for a move all the way back down to 25? Well, what happens every time we reach this support? We bounce. So if it happens, let me show you this. Let me show you this real quick here. We didn't even measure these here. Just for shits and giggles. Is this any different? No, look, 7.8%. We bounce, look, we bounce right up. We hit up here. And we came back down into 6.42%. Actually, we can say they came down to here because, to be fair, this was a little lower high, and then we came back down, and we ended the move there. 7.86, 7.99, and look, these moves to the upside end in the exact same spot. Look, they go right back up to the exact same spot. And every time people think it's different, okay, this time we're going to go, this time we're going to go, this time we're going to go. So to answer your question is, what do I see in the market? Why is this going to be any different? We bounced here, 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 here. But you want to think that this time we're going down. And you can't rely on a market structure. Oh, well, now we've got a bearish market structure. Pay attention. These are all bearish market structures when we're going down. We're in a range. When we're going to go up, what do? We put in a W. Look, we put in a W. When we go to the top, what do? Head and shoulders, M patterns. Look at this. It's all going to be bearish. Of course it's going to look bearish. And yet this is where people want to start longing. This is where people say they get excited. We're going to all-time high. Here it is. This is going to go. If you don't believe me, just look at the dates between these time frames. Like if you go look to crypto Twitter, April 13th through April 13th and 14th. Do me a favor, just look up there. Just for your own curiosity, look at your favorite influencer and look at April 14th. What were they saying? What were they saying? Majority of everybody was, yeah, we're going, moon. And what happens? The exact opposite. So if everyone is bearish and 90% of my feed is pointing to the downside, why would you think that I'm expecting us to break this. Are we ever going to break this? Yeah, eventually we are. I think we are. I think it's only logical that we are. We've got to put in, and I'm not trying to be bearish. I'm actually going to erase everything here because I want to show you something. I made my point there. I made my point. I'm bullish, but in order to remain bullish, I also understand that we need market structure. We put in a low, a high, a higher low, a higher high. We need that the higher low. We need one. That I know. But while the market makers are getting paid, why would they hurry this up? Remember, guys, the market is not in a hurry. Only you are. They have all the patience in the world, and the more people get chopped up in here, the longer we're going to stay in here. There is no time frame to this. People look at bearish market structure and think, okay, it can't last more than a week. It can't last more than 2 weeks. No, it can last as long as you're willing to participate, as long as you're willing to feed the system. It will stay in here indefinitely until the market is exhausted. Most of the liquidity says, you know what, I'm just going to pause. I'm getting chopped up to death. I'm just going to wait. Until that happens, we're not going anywhere. There is no time frame for this. So for right now, there's only two things that you should be worried about. You only have two moves here. Let me show you what those two moves are here. Let me go here, here, and here, and knock this out here. Okay, and we're gonna put here. Okay, this is the only thing you should worry about. If you're a scalper and a day trader, you worry about the middle here. If you are even if you're a swing trader, to be honest with you, you can make some money playing off of these swings. But say you're not. Say you're an investor and you want to know, are we going to drop? Are we going to go? Wait for a break of here and a confirmation. You're going to have a lot of liquidity sweeps. Liquidity sweeps are normal. They're areas for them to knock out the previous stops. When people try to outsmart the market, they go, okay, well, this is the low. If it drops below here, then I know they're going to be putting in another lower low. So I'm going to go ahead and I'm really smart and no one else is thinking this. I'm going to put my stop right here. If we break this low, I'm out because I'm smart and no one else is thinking this. Well, guess what, guys? Everyone is thinking that. So when you go down to these lower time frames and you look at these liquidity sweeps, wow, look at this. Let me show you this. Remember this right here? Just a couple of weeks ago when we had this drop and we moved up here? Where do you think people's stops were at? Think about it. Look, let me zoom in here. What do you think people's stops were? People's stops are right here. Bob, it's not right here. And look, what did they do? Before they went up, what did they do? They just came and took everyone's stop losses here. Why did they do it? Because they know you're a degen. Because 99% of the people who got stopped out here chased it here. 99% of the people who bought it here said, the hell with this. I'm not going to play with this. I'm going to leave it alone. And then when they see this, the very first thing they said to themselves is, I knew it. I knew it. They go into the market and now they lost their great entry down here and they're chasing it up here. Every single person does that. Look at this move here. Look at this move here. Look at this move here. Before they went up, what did they do? Boom, wick it down. These wicks below the lows should always be your signal. We're going up. We're going up. Every time they break it to a low, it's just to knock you out. And then you got people so zoned into this low that what are they doing? They're doing two things. You got not only the people who have stops, but people who say, if we break this low, I'm going to short. We break this low, I'm in. They short, and this wick takes out all the stops, and then the quick move to the upside takes out all the shorts. I mean, it's brilliant. Look at this here. Before we moved up, we put a low here, right? Everybody's bearish. No, we're going down. Oh, here it is. They see this wick? Nope, that's it. We're going down. They knock out the stops, they push it up, they knock out the longs, and let's go. Before every move, they will do this. This is a signature that they do before. Look, right here. We're dropping. Look, they wick it right before they bring it up. I mean, the fingerprints are so obvious on how they do this, and yet people don't catch on. People will fall for it every time. Look, here's another one. Look at this right here. Oh, look, double bottom. That's it. I'm going to put my stop here. This is a double bottom. I love playing double bottoms. Double bottoms, we're up. This is a bullish pattern. If we break below here, I'm out. They come down, they fucking take the stops, and let's go, baby. We're out of here. You see this? This shit is comical. It's just comical. You just have to know where to look. You have to keep a reasonable expectation of the market and quit trying to overthink it. All you have to do is look. Don't worry about if we're going up or down, if we're going bear or bull. We break this and we confirm, meaning that we break up here, we back test the break, we hold, and we start moving up, you're in. But here's the problem with most people. If we break this and we hold here, the moment we check it, the minute that this thing stops, everybody wants along. Everyone wants along. Nobody wants to wait for 1 or 2 candles to break up. Oh, no. I need to I need to get the absolute bottom. Well, guess what, guys? When the market makers back test this here and they're going to go up, there's a certain amount of liquidations that are happening. There's a certain amount of you need to understand the way algorithms work, first of all, and the way derivatives work. When they're going to push a move to the upside, they're going to pay someone out. Someone is going to get paid. And for those of you who play leverage or have played leverage and play sizable positions, you're going to relate to this more than anyone else. How many times have you seen something go up and you say, fuck, we're going to go up. I'm going to long it. And the moment you hit confirm, what happens? You see it pauses or it starts to drop. And you're like, oh, fuck, I was wrong. And you do one of two things. I'm going to wait or I'm going to get out. Now, if you were patient and you waited, you're going to notice they're going to keep on going down. They want to shake you out. But more than anything, what happens is you ruin their algorithm. They have everything is measured. When you're going to go up, they have a certain amount of money that they're going to pay. When people start piling on, that algorithm gets skewed. And now it has to recalculate how much they're going to pay. And they're going to have to say, is it worth it to go up? Because if we go up, we're going to have to pay all these guys that are long. And you'll notice that some of the times it'll pause and it'll come right crashing back down and then it goes right back up. Why is that? Because when it's crashing back down, what it does, it shakes everybody out. That's what these moves are. These moves are to shake people out. They know which way they're going to take it. They already know. What they have to adjust for are the last minute people who jump in at the last minute. It messes up their algorithms. So if the move is to take it up and you don't have any patience and you wait for the very first touch here and everybody piles onto a long, you're putting a lot of weight on that algo. And they're going to say, no, fuck it. We're going to bring it down. There's too many people anticipating it. We've got to shake them out. We cannot pay that many people out. They already have. They're not in the market to pay you. You're going to see a move to the upside. And if enough people get out, it comes back up, it consolidates, and it starts moving back up. If you want to catch moves like this, guys, don't worry about here. Don't worry about this confirmation. Don't even worry about the green candle that comes up here. That's the worst candle to play. The green candle up here is the worst candle to play. You want to wait for follow through. Follow through. Stop trying to catch it right at the Pico bottom. The Pico bottom, you're just playing against yourself. Because if everyone does that and everyone does do that, they will bring the price back down. If you scale in slowly and you don't mess up the algos too much, then you can start catching what? That middle. You start catching that middle. When too many people put a target to a certain level that it's very obvious, you think we're going to get there? No, we're not. The algos are going to start dropping it before then because they know that you're watching and you're like, shit, we're not going to reach that target. Let me get out. When enough people get out, what happens to your target? It eventually gets hit. But what did you do before that? You got out. So a lot of people unloaded And then it allowed the algos to say, okay, now if we go to this original target that we were going to go to, we can make X amount of dollars. Guys, you're playing against algos and bots that it's very hard to win. If you think you're going to catch the bottom, you think you're going to catch the top, you're not going to win against them. So stop trying to do that and settle for the meat. Settle for the middle, for the inside. Stop catching pico bottoms and pico tops. You're going to live in a much more calmer and much more relaxed state because you're not worrying about everyone who's worrying about here. Extreme fear, extreme bull, extreme fear. I'm chilling right here in a hammock. I'm in a hammock here. I'm not at the base of the hammock. I'm not at the bottom of the hammock. I'm just chilling right here. This is the best part of the hammock. Just swinging back and forth. I don't care about the stresses putting onto the anchor here. I don't care about the stresses putting onto the anchor here. Fuck it, I'm right here. I'm just swinging back and forth, back and forth. Look at where all the action is. Look in here, right in there. I'm gonna do this for you guys. Check this out. This is gonna really drive it home. Watch this. You see this green box? You see this green box? I'm not worrying about the top. I'm not worried about these wicks at the bottom. Okay, this is the green box, right? This is where all the action is. Watch this. Look at this. Look at this. Where's all the action? Look. Where's all the action? Even better. Watch this. Boom. Hourly time frame. Where all the action at? Look at this shit. I mean, how do you not make money inside of all of this action? Not worrying about the top, not worrying about the bottoms. Look at this. Inside that middle. Now, here's this. 15-minute time frame. Look at that shit. This is where I live. I live in the 1 to 4. I live in the 1. 15-minute is the equivalent of the weekly time frame for many. For many, the 15 minutes is my weekly. 1 to 5 is where I'm at. 15 is looking at the macro. For me, this is a macro view. The 15 is a macro view. This right here is where it's at. But look, tell me you can't make money in the middle? Why is my computer freezing? Sorry, guys. I can't expand it anymore. There we go. You see this? If you're playing in the middle, man, you're making some good money. All right, guys. I hope that answers your question. I guess there's no real answer like, am I expecting a drop or am I expecting a high? The real answer is I don't care. I don't care. You know why? Because if we break below here, guys, what's going to happen? What's going to happen if we break below here? We're going to do what? Think about it. We're going to do what? What's the answer I'm looking for? Here, I'll give you a hint. I'm going to go to the hourly time frame. I'm going to give the hourly time frame, and I want you to look at this move here. Why is my computer doing this? Give me 1 second, guys. I can't seem to get control of my mouse pad. Okay, when you have a violent move like this, a move to the upside, what ends up happening, guys? What ends up happening? We go into a what? We go into a what? We go into a range. Forget about this. Forget about this. If you have spot bags, your spot bags are beautiful. They're in great. These moves, these big moves are for your spot bags. This is where all the action happens. Look, we get into a range. Find the range. Find the range that works for you. Don't get greedy. Find the tops that hit the most. Don't worry about the deviations. Don't worry about the deviations to the top to the bottom. Get the meat. The meat of every range. Every single range, there is a meat to be had. That's what you should be worrying about. Forget about 35,000. Forget about 23,000. And shit, man, play the middle. Play the middle. That's all you need to do. If you're a swing trader, every dip, you buy. So here, I'm going to erase all of this. Here. So if you are a swing trader, what do? You buy. The next higher low, you buy. Next higher high, you can take profits or you can hold, because most people are waiting for the 2024 bull run. So what do you do with the next higher high? You sit on your hands. And what do? You wait for the next higher low. Next higher low comes in, boom, you buy some more, you do that. Now, if this comes crashing down, what do? Do you sell? Well, that's up to your trading plan. But if you're holding for the bull run, then you are buying lower. You are buying lower to lower the cost average of this higher low and of this higher low whenever it comes. You bought at this higher low, and if we drop here, well, you were willing to buy it here. Why would this be any different? If you get a chance to buy it here, why is this any different? You were gun-ho to buy here. You're gun-ho to buy here. You were sure as hell wanting to buy here. Everybody wants to buy here and here, but nobody wants to buy here. Keep that in mind, guys. Keep that in mind for the future dump that you have. Forget about how low it's going to go. What you have to worry about is how much are you willing to buy on the next drop. Don't worry about how low it's going to go. How low it's going to go, it's irrelevant. It doesn't matter. What matters is what are you willing to buy. If you are uncertain, then you don't belong in this market. Because this market here is for the hardcore fucking believers. The people that believe that we're going to go to 250,000 to 500,000 like I do. Who gives a shit where you're buying? Buy, 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 buy. Buy, 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 buy. Don't worry about when it goes up. All you have to worry about when it goes up is, okay, great. Where's the next higher low? That's all you have to be. That's all you have to worry about, because every move has a market structure. Every move has, to the upside, has higher highs, higher lows, higher lows. Just like on the downside, what do we have? We have lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, until you bottom and you reverse that trend. We are in a reversal of trend. Are we going to a bull market? I don't think we've started a bull market. I really don't, because I think this is very similar to every other market. We have a bounce before we have a bounce after coming out of the bear market. We have a bounce. Then what do? We come back down. We test some of those lows. We test the resilience of some of those lows. 6 months before the halvening, what happens? This happens. This is when you start. This is when you start. Why is this not showing me? Oh, this is the dollar chart. Let me do this. BTC. What I should have done in the beginning. USDT. Go to the Binance. Go to here. Okay. This here. After a bear market, what do? We have a bounce. We test the lows. 6 months before, right here. 6 months before the halvening, what happens? We start a bull run. Got out of the bear market. We had our bounce. We test the lows. In September, we're going to have the right here. Actually, right here. September, right here. Right here, it marks the 6 month period. Let me go. 6 month period before the halvening. What do you think is going to happen, guys? You think we're going to go? Or you think at some point maybe we put another higher low, just to say for the sake of the bulls, another higher low, come down and test some lows, and we start our bull run. When we get to wherever in here, somewhere in here, guys, we're going to test the lows. Give me 1 second. Excuse me. Somewhere in here, somewhere inside of here, we're going to test these lows. Never mind, I'll just leave it alone. In here, we're going to test these lows, somewhere in here. When this happens, this is your absolute last time. Somewhere in here, in this time frame, whether it's in here or whether it's in here or whether it's in here, I'm talking about time frame. This box doesn't represent a price of Bitcoin. This box represents a time frame between, well, actually, you know what? Excuse me. This is more accurate. Between the middle of August and the end of September, beginning of October, right there, right in there, right there. Okay, right there. Here's the homework for you guys. Go back in time prior to every bull run and look at the time between the middle of August and the beginning of October. Look at what happens to the price. Okay? Look where did we bottom? Remember, guys, you're not worried about price here. You're worried about time. In this time frame is where historically every single bull run prior to the halvening we have started. So, why are you worrying about a breakout, or why are you worrying about a breakdown? The only thing you should be worrying about is here. If you're an investor, right here. If you're a day trader, the middle. That's it. That's it. When we move up, what do you worry about? You put a range. You mark the high, you mark the low, and you wait for that range to identify itself. If we break down, what do? We map out a range, and we stay within that range. We don't go in these. Everybody thinks that all we're going to do is this. Everyone thinks that you're going to see a candle that does this. Like that. That's what everyone expects. Why is this doing this? Oh, give me 1 second. Now it's driving me a little bit insane. Oh, I hit the wrong thing. This is what I meant to hit right there. Everyone expects this, and everyone expects this. This is what everyone expects. It's so funny. That's it right here. People expect this, and people expect this, and they want to make sure they catch this or they catch this. Look back. Look back. Guys, how many times has this happened? Very, very few. This was kind of a black swan event in the sense that this was all what happened here. Liquidations. Remember, the Celsius exchange went under. 3AC was insolvent. This is some stuff that doesn't. You can't plan for this. You cannot plan for this. What happened here? Why did we drop like this? You know why we drop like this, guys? I'll tell you why we drop like this. I'll tell you exactly why we drop like this. Let me show you this, guys. Let me show you this. This was a 50% drop. Let me break it down for you because I've already done my homework and I know why this dropped. Here, everyone was calling for $100,000. Everyone. Even the most inexperienced trader was saying, wow, if we're going to $100,000, I want to maximize my money. I'm going to use a 10x. I'm going to use a 5x. Hell, you know what? I'm nervous. I don't want to get liquidated. I'm just going to use a 2x. A 2x. A 2x, guys, wiped out with 50%. That's all you needed with the 2. Even with the 2x, think about it. With just a 2x, you're wiped out. Now, we hit the bottom is here. The bottom was right there, 52%. If you're a 1xer, you're telling me you held all the way 50%? No, you didn't. This shook out even the 1xers. Too many people were leveraged here. Way too many people were leveraged here. So what did they do? Look at this. Look at this bounce. Look at this bounce. 136%. Even if you caught this late and you said, damn it, here it goes, here it goes, here it goes. With a 1x, look, 1x, look at this, right here at 100%, right there. So you see this bounce, you're like, remember guys, this is the weekly, so this on a daily, 12-hour, 4-hour, this is gonna look like a monster bounce. Here we go, let's do this. I don't want to take a chance. I'm gonna 1x, and look, everybody got wiped out again. They got wiped out trying to long it, and they got wiped out. They got wiped out here trying to short it. This is a bounce. Excuse me. This is the opposite. I'm confused. The opposite. People are trying to fade the bounce. Fade the bounce. What happens? They knocked out all the shorts going up here. They knocked out all the longs here. That's why we dropped. Remember, it's always an inverse. And here they knocked out every single one of these. Because think about this, guys. You're playing this, you're looking at this weakness, right? So this is kind of where we're at right now. Oh, no, we're going to go down, we're going to go down, we're going to go down. So what do? You map out an area of resistance, right? You look at this area here, and I'm trying to put you in the mindset of where we were here. Look at this. Look at the mindset. So you're thinking to yourself, okay, you're looking at this here, and you're thinking, okay, we just had a bounce here. We had even right here, look, even right here, there's a good area. Like this is a really good area of here. Remember, none of this existed. You're living right in here. You're in here. Okay, so we had a drop, then we had a bounce, and every time we hit, look, we had a bounce here. Every time we hit here, what do? We just drop. We drop. We hit here, we drop again. And you're thinking, shit, every time we come here, we fucking drop. Now, as soon as this happens here, you think that right here, you are thinking that we're going to go higher? Come on, be honest with yourselves. What are you thinking? The same thing is going to happen. It happened here. It happened here. It's going to happen here. So what do? You short. And what do? What do? They bring it up and knock everyone out. Everyone gets knocked out of the shorts. Everyone gets knocked out of the longs. And look, then we finally put in that top. And eventually, yeah, people are going to start getting paid. But think about the psychology. Everyone got knocked out here on their longs. Everyone got knocked out here on their shorts. Do you really think people are putting a lot of shorts in here? You think really people are really jumping on board here? No, they're not, guys. They're not. The majority of people are going, oh, screw, this is just a trick. They're going to bounce it up. The moment I short, What are they going to do? They're going to bounce it. And this is what happens. This is where they take advantage and they drop it. Very few people catch this, guys. And on these bounces, this is where they shred people. People think, okay, this is the bottom. How many of your favorite influencers were calling the bottom at $36,000? This is the bottom. This is it. We're consolidating. We're putting a consolidation. There we go. Here, 2 weekly candles. We're going up. Everyone goes long. And then look at this bleed out. Look at this bleed out. This bleed out took everyone who was 64%. So even if you were a 2x, you're knocking out, that's 128%. 1x, 1x, you're losing 64%. So everyone from anything above a 1x got liquidated. Anybody, if you caught the top here, everyone that's more than a 1x got liquidated. If you were a 1x, you got you're down 64% right here. But most people, again, they're not going to ride at 64%, so they got out of the market. They're like, fuck this, I'm leaving it alone. I'm not gonna long it, and they kept on dropping until they got everyone out. This is how they make their money. So stop worrying about if we're going to break to the top or we're going to break to the bottom. It doesn't matter. Once it happens, we establish a range and then we go from there. All right, guys. Hopefully that was helpful, and you guys were able to get some benefit out of this. You know what? Let me look at Pepe. Let's take time to actually no. You know what? I've got to run. I'll make a separate video for Pepe at another time, but I do have to go. All right, guys. Have a good one.